Let me now bring on board Sajeev Dhawan, Managing Director of JV Capital Services. He joins us live from New Delhi. Sajeev, good morning. Thank you for joining us. Sajeev, this week bulls for sure have taken a backseat. Do you think this week's price action is beginning of a downtrend or a blip in overall rally?
Morning, Nikunj. Well, I still think that if you're going to have a position in the market, you go on the long side. The trend still remains firm. Not just in the Nifty, but virtually all the trading stocks. You cannot fight liquidity, which you've just mentioned. Yes, the negative concerns on the fiscal deficit remain, but there's talk again that maybe today or in the next few days that there'll be some action by the government on diesel and LPG prices, which would add to the positive sentiment. Global markets are rallying very strongly. European markets, which are in a pretty bad shape on the fundamental side, are very near their all-time highs. And so long as that sentiment remains, it's difficult to see where the markets would fall to if there was a sell-off and who will sell. As you've mentioned, the domestic funds have been selling. Retail investors who wanted to sell have sold off. So unless the FIIs for some reason hit the panic button and start to sell aggressively, it's difficult to see the market slipping more than 50 or 100 points in the short term. If there's some very bad results, yes, that could be an excuse for a sell-off. But until that happens, we would prefer to buy the Nifty on any significant decline, so long as it doesn't break maybe the 5,900 levels.
Sajeev, what is the deal with Tata Motors? In the last 3 days, just about everyone has upgraded their price outlook on Tata Motors. CLSA, Credit Suisse, HSBC, Morgan Stanley. The fact that JLR has turned around is a well-discovered fact. Why are brokerages suddenly so bullish on Tata Motors?
Well, I don't know if it's suddenly. We've discussed the stock many a time on your show. We've obviously always talked about the DVR. I think the last time we spoke was 160, 165. That's now 185. The target for that was anywhere between 190 to 200, where we would look to lighten up positions. I think it's a case of Nikunj in the market, which is at 6,100 almost, 20,000 Sensex. What do you buy? I mean, you need to buy quality stocks, the large institutions. They need stocks where there's a lot of liquidity, and they need stocks which still can move another 5-10%, where momentum and liquidity can take those stocks even higher. Mid caps, yes, they're rallying as well, but there's always that risk element. The fundamentals for auto stocks also don't look as great on the sales figures over the next few months, and their own associations have come out and saying that they expect sluggish sales growth. So I think a lot of it is due to momentum. A lot of it is due to the feeling that investors and traders maybe have missed out on some of these stocks. And the biggest point of concern, as you mentioned, I think, is that virtually everyone is bullish on Tata Motors, and it very rarely happens that when the whole market is bullish on the stock, it continues this upward march, because when that trend changes, there'll be some very aggressive selling. So if you're buying at 185, the DVR, I think have a shorter time frame and a shorter target, or maybe 190 to 200, and then probably look to lighten up a bit.
Sajeev, hi, morning. Out of Tata Motors and Maruti, what would you pick?
Well, we've been constantly looking at Tata Motors. I think Maruti also has had obviously a fantastic run after its bad news. And again, that's the problem. The buy reports and the recommendations have come when the stock price is at 1,500, not when the stock was at 1,000 and 1,100. Okay, it's fine to say they had a lot of issues and a lot of problems at that stage, but that's where the contrarians and the people who took a risk on Maruti would have made the real money. To buy the stock now at 1,500, 1,600 levels, I think the upside is probably limited unless, again, the liquidity flows and the momentum continues in the market, because based on fundamentals, I think these prices reflect a lot of the positive news, completely ignoring any possible negative news which may come into the sector over the next few months.
Finally, after a gap of nearly 1 decade, we have a railway passenger fare hike in place. Now, in terms of impact, railways may not be able to generate a lot of revenue because of this hike. But in terms of a signal, do you think this is an important message? And do you think indirectly the government is clearly trying to indicate that the Indian customer or the Indian consumer will now have to pay up more?
Yes, I think it's obviously a good positive sentiment booster from the macro front. The government's taking these measures. They frankly have no choice. They've got a huge problem with their deficit. They have to either increase tax collections or cut their expenditures or boost revenue some way, and this is probably one of the easiest way to do it. Yes, there might be some political backlash, but again, it's a positive signal, and if they follow that up with a confirmed hike in diesel prices and some more policy action there to reduce the deficit, the markets will only react to that with a positive bias. There's still a lot of possible negative news flow that can come. You've still got the possibility of a downgrade over the next year or so, so that will weigh on the government's mind. So all these actions, they'll have their short-term impact, but obviously a positive for the markets.
A follow-up question to that, Sajeev, is that if we get a fuel price hike, railway fares have gone up, these moves will only stroke inflation. This move will only hit the consumer or the spending power. So one side, yes, we can be happy that the fiscal deficit will be taken care of, but indirectly this will hit the Indian consumer.
It will, obviously, and the way the RBI governor has his policy, if inflation stays high, he's simply not going to cut interest rates. I personally don't think that strategy will work out in the long term. He'll be forced to cut rates at some stage, but again, domestic consumers have been struggling for the last year or so with an increase in prices across the board, and frankly, the foreign investors aren't too concerned about that. They're looking at the bottom line. The demand for FMCG products continues to do well, so people are struggling on the ground level, yes, but if we're looking from a selfish stock market perspective, so long as corporates manage to show that bottom line growth, FIs will not be too concerned about that, but inflation will be a concern, and I'm afraid it probably will remain a concern for the next few years or so, because a lot of the inflation is imported, and we cannot control the prices of global oil. And unless the government actually makes some policies which strengthens the rupee, that's a double whammy with higher oil prices and a weakening rupee.
Sajeev, what happens to the telecom space, considering the Department of Telecom has now issued a one-time free demand notice to telecom companies? It ranges anywhere between 5,200 crore rupees for Bharti to 1,880 thereabouts for Idea. Does it seem like this could be a sentimental negative for telecom companies today?
See, actually, I think you've got to look at what's happened to these stocks over the last few months when there was extreme pessimism and negativity on the sector. Bharti's rallied more than almost 20%, I think, from 250, 260 levels. Idea's moved up from 80, 84 levels to 110 levels. So whatever over and pessimism, negativity was there has certainly been factored in, and there's been a good amount of buying in the stocks. The debate on the spectrum prices will continue. Whatever short-term negative comes now, I don't think it'll have too much of a downside impact on the stock prices, maybe a 5% fall if the markets are generally weak, but otherwise you can clearly see that the sentiment has turned for these stocks. There were no buyers, no buy reports for these stocks again a few weeks ago when the stocks were languishing, and now again suddenly buy reports have come up after that sort of rally. So the momentum is probably still there, and you probably buy the dips over the next couple of months. But fundamentally, I think again the markets have, if you're buying into Bharti or an Idea now, you're catching at the end of the rally, and I think you need your stop losses in place, and you're not going to get that 20-30% sort of up move from the current levels.
Sajeev, at a time when markets are clearly looking at sector rotation, PSU banks have appreciated, beaten down infra names have also participated quite smartly. Odd asset owners are looking strong. What's left in terms of a sector rotation now?
There's not an awful lot, Nikunj. I think you could probably still look at infrastructure, a sector we didn't like, but that would be purely a trading call for the next couple of months. You can start to look at some power stocks. That's been a sector which has been languishing and totally off the radar for the last few years and underperformed. So stocks like Adani Power, India Bulls Power, high risk for sure, but they could give you a decent up move if you're a trader over the next few months, again on the back of liquidity and momentum flows, and as you say, markets looking for new sectors to move into, and that's why I feel that you should still probably remain with the sectors where the large institutions are still investing, whether that's FMCG, pharma, metals now to some extent, and auto, and obviously banking will be one of the major beneficiaries, I think, over the next few months.